I learned this lesson the expensive way, the only way the market ever teaches anything that matters. Long before people quoted my name or pretended my words were simple, I was like every other trader, clever, impatient, convinced that activity itself was intelligence. I believed if I just analyzed more, clicked faster, predicted better, the market would eventually reward me. It never did. What finally changed everything was not a new method, not a secret indicator, not a trick whispered in a back room. It was alignment. And that word may sound soft, but it is ruthless in practice. Because to align with the market, you must first surrender your opinions. If you are serious about trading, I want you to hear this clearly from the start. The market does not need your ideas. It needs your obedience. Everything else is noise. Before we go further, if you want to deepen this way of thinking, you will find our new ebook, Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk, linked in the video description. Read it slowly, not for excitement, but for correction. That book will take what you learn here today and cement it into your trading DNA with examples, frameworks, and the hard-earned wisdom of someone who made and lost fortunes until the lessons finally stuck. Now let me tell you what alignment really means, because most traders misunderstand it completely. They think alignment is finding a trend line, a moving average, a label that says bull or bear. That is not alignment. That is labeling. Alignment is an inner state that expresses itself outwardly in behavior. It is when your timing, your size, your patience, and your expectations all match what the market is actually offering. No more, no less. The market is always speaking, but it speaks in probabilities, not promises. When I was young, I tried to force it to speak my language. I paid dearly for that arrogance. The first step to alignment is accepting that the market is always right. Even when it feels irrational, even when it humiliates you, even when it contradicts everything you think you know. The tape does not argue, it reveals. If you are losing money, you are out of alignment. Not unlucky, not cursed, not early. Out of alignment. And once you truly accept that, something strange happens. You stop trying to be right. You start trying to be in harmony. You begin to notice that big money is never made by prediction, but by participation. I never made my fortune by guessing tops and bottoms. I made it by sitting tight when the market confirmed I was right, and getting out fast when it proved I was wrong. That sounds simple, and it is simple, but it is not easy because alignment requires patience, and patience is the one thing the market uses to break most traders. The market spends far more time doing nothing than doing something. Most people cannot tolerate that. They need action to feel alive, so they manufacture trades in dead conditions and call it strategy. That is misalignment disguised as effort. When you are aligned, you are not busy. You are selective. You wait, and you wait without frustration, because waiting is part of the position. You understand that the market has seasons just like nature. There are times to plant, times to harvest, and long winters where doing nothing is the highest form of intelligence. Alignment begins when you stop asking, "What can I trade today?" and start asking, "Is the market ready to reward risk right now?" Most days, the honest answer is no, and the trader who can accept that answer without resentment has already separated himself from the crowd. Let me tell you about my early years. Back when I was just a boy reading numbers in a brokerage house in Boston. I thought I had discovered something magical, patterns in the way prices moved. And I did see patterns. That part was real. But what I did not understand yet was the difference between seeing a pattern and knowing when that pattern mattered. I was making trades based on tiny movements, scalping pennies here and there, convinced I was beating the game. Sometimes I won, often enough that it fed my ego. But I was not aligned with anything except my own need to feel smart. The bucket shops eventually banned me because I was winning too consistently at their game. I thought that meant I had mastered trading. It did not. It meant I had mastered their game, which was nothing like the real market. When I finally stepped into the legitimate exchanges with real capital, the market humbled me completely. All those little patterns I had relied on meant nothing when real forces were at work. Accumulation, distribution, genuine investor sentiment, the movement of serious money. I lost everything. Everything. And it was the best thing that could have happened to me because it forced me to learn what alignment actually meant. It meant waiting for conditions where the market itself was ready to move, not just where I thought I saw an opportunity. It meant understanding that most of the time the smartest thing to do was nothing at all. Nothing. Just watch. Just learn. Just wait for the market to set up properly. This is what I need you to understand. Your enemies in this game are not other traders, not the market makers, not some conspiracy. Your enemy is your own impatience. Your enemy is your need to feel productive when productivity means waiting. Your enemy is your ego, which would rather be active and wrong than patient and right. The market will exploit every one of these weaknesses without mercy. And it should, because that is its job. The market's job is to transfer money from the impatient to the patient, from the undisciplined to the disciplined, from those who fight to those who align. When I finally learned this, when I finally understood that my opinions were worthless and only the tape mattered, everything changed. I stopped trying to predict. I started observing. I would watch a stock for weeks, sometimes months, just studying its behavior. How did it act when the broader market was weak? How did it act when the market was strong? Where did buyers consistently step in? Where did sellers consistently appear? I was learning its personality, its rhythm, the way you might study a person before you trust them with something important. And then when everything lined up, when the stock was acting right, when the broader market was favorable, when I could clearly see the path of least resistance, that is when I would strike. Not with my entire capital, but with a measured position, always protecting myself against being wrong. Because being aligned does not mean you are always right. It means you are positioned so that when you are right, you make significant money, and when you are wrong, you lose a manageable amount. This brings me to something critical that most traders never learn. Alignment is not a one-time achievement. You do not align once and stay aligned forever. The market is constantly changing, shifting, evolving. What worked yesterday might not work today. A stock that was under accumulation can shift to distribution. A bullish market can turn cautious. Your job is to continuously read these changes and adjust. Not based on fear, not based on hope, but based on what the tape is telling you. I kept journals for years, detailed records of every trade, every observation, every mistake. This was not nostalgia. This was training. I was training myself to recognize the subtle signs that appeared before major moves. I was learning to distinguish between genuine strength and false strength, between real weakness and temporary shakeouts. The market repeats itself because human nature does not change. Fear and greed, hope and panic, these emotions have driven markets for centuries. Once you learn to recognize their fingerprints in price action, you have an edge that no indicator or system can replicate. As your understanding deepens, you will realize alignment is not about following the crowd, but about following the path of least resistance. The market moves in waves, driven by human emotion, fear, greed, hope, and regret. These forces do not change. Only the costumes do. When a market is aligned for a sustained move, it becomes obvious, not to the public, but to those who are patient enough to watch without interference. Prices begin to behave differently. Reactions become shallow. Advances persist. Bad news is absorbed. Good news accelerates. That is the market telling you quietly but firmly which direction it intends to go. Your job is not to anticipate that message, but to wait until it is undeniable. Most traders want to be first. I learned long ago that being early is indistinguishable from being wrong. The money is made by being right and staying right. Alignment means your ego steps aside so your account can grow. You stop trying to impress yourself with clever entries and start measuring success by how well you sit through discomfort in the direction of the major trend. This is where most people fail. They find the right direction, but they cannot align their emotions with it. They take profits too early because they do not trust the market. Or they hold losers too long because they do not trust themselves. Alignment requires trust built through discipline. You align your risk first, always. You decide how much you are willing to lose before you ever think about how much you might gain. That single act puts you in harmony with uncertainty, which is the market's natural state. When you respect risk, the market respects your capital. When you ignore it, the market educates you brutally. I have had fortunes vanish because I broke alignment with my own rules, not because the market changed, but because I did. Let me tell you about 1907. I had built up a substantial position based on my reading of the market, and I was right. The panic came, stocks collapsed, and I made a fortune shorting. But here is what nobody talks about. I almost did not. Twice during the decline, I got scared. Twice. I almost covered my shorts, because the bounces were so violent, so convincing, that I questioned my analysis. But I had learned by then to check my emotions against the tape. The tape still showed distribution. The rallies were being sold into. The path of least resistance was still down. So I held. I sat through the discomfort and let the alignment play out. That trade taught me something profound. The market will always test your conviction. Always. It will create exactly the conditions designed to shake you out of good positions. If you are in alignment, if your analysis is based on solid observation rather than wishful thinking, you can withstand these tests. You do not need to be comfortable. You need to be correct. And correctness comes from alignment, not from confidence. The market will test you, though. It will shake you out if your conviction is not based on solid observation. I have seen it happen countless times. A trader gets a good read on a stock, takes a position, and then the market does what it always does. It wiggles around, tests support and resistance, creates doubt. If you are not truly aligned, if you are just gambling on a hunch, you will get scared out right before the big move happens. But if you have done your work, if you understand why you are in that position and what you are waiting for, you can weather those tests. I developed what I called pivotal points, price levels where a stock, if it crossed them with volume and conviction, would likely continue in that direction for a substantial move. Finding these pivotal points became an obsession for me. It required understanding the stock's entire history, its patterns over months and years, where it had met resistance or found support in different market conditions. When a stock broke through a pivotal point convincingly, that was the market screaming at you. This is the direction. This is where we are going. That is pure alignment. You are not predicting. You are confirming and acting on what the market is clearly showing you. But here is where most traders destroy themselves. They confuse activity with productivity. They think that making a lot of trades means they are working hard, that they are going to succeed through sheer effort. That is not how this works. In fact, overtrading is one of the fastest ways to destroy your account. Every trade has costs, not just commissions, but the emotional cost, the cognitive cost, the opportunity cost. When you are constantly in and out, you are not giving yourself the space to think clearly, to observe properly, to wait for true alignment. I learned to think of my capital as ammunition in a war. You do not fire every bullet as soon as you see movement in the distance. You wait for a clear shot at a target worth hitting, and when you do fire, you make it count. The best trades I ever made were the ones where I waited weeks for the setup, studied every angle, confirmed my thesis multiple times, and then committed substantial capital when everything aligned perfectly. Those trades made me more money than 100 small scattered positions ever could have. Risk management is the foundation of alignment. Being aligned with the market does not mean you are always right. Even the best setups can fail. Even when you have read the tape correctly, unexpected news can change everything in an instant. That is why you never risk everything on one trade, no matter how certain you feel. I had an iron rule. Never let one trade destroy you. Use stop losses, not as tools of fear, but as tools of intelligence. If the market proves your reading was wrong, accept it quickly and move on. The market does not care about your stubbornness, your hope, or your need to be right. One of my most quoted sayings is this: "It is not the thinking that makes the money, it is the sitting." Let me expand on what I mean by that. Once you have identified a good position, once you are truly aligned with a real trend, your job is to sit tight. Let it develop. Let it run. Too many traders take profits too early because they are afraid of giving back gains. They cannot stand the discomfort of seeing their profits fluctuate. But if you are truly aligned with the market, if the trend is genuine and the underlying conditions have not changed, the profits will compound in ways you cannot imagine when you first enter the position. I remember holding cotton for months during a massive bull market in that commodity. Every single day, people would ask me when I was going to take profits. "Livermore, it is already up so much. You should lock in your gains. What if it reverses?" But the market was still showing me strength. The trend was intact. The fundamentals supported higher prices. Every pullback was shallow and bought aggressively. So I sat, and I sat, and I let that position grow into one of the most profitable trades of my career. Sitting is harder than it sounds. It requires ignoring the noise, the opinions of others, the daily fluctuations, your own fears and second-guessing. It requires trusting your initial analysis until the market tells you clearly and unambiguously that the story has changed. Most traders cannot do this. They need constant validation. They need to feel like they are doing something. So they exit good positions too early. and enter mediocre positions too often. They are always moving but never getting anywhere. The market communicates through price and volume. These are its only two languages, and you must become fluent in both. Price tells you where the market is and where it has been. It shows you the battleground between bulls and bears, the levels that matter, the ranges that define current conditions. Volume tells you the intensity, the conviction behind the moves. When you see a stock breaking out on heavy volume, that is the market shouting its intentions. When you see a rally on light volume, that is the market whispering, unconvinced, likely to fail. Learn to distinguish the shouts from the whispers, and you will know when true alignment is possible. A stock that pushes through resistance on massive volume, with price gaps and strong closes, that is aligned for higher prices. A stock that cannot hold gains, that closes weak even on up days, that sees volume dry up on rallies, that is not aligned. No matter what the cheerleaders are saying, the tape does not lie. It cannot lie. It is the pure expression of supply and demand, stripped of all the narratives and opinions that cloud judgment. This is why I never listened to tips, never cared about inside information, never paid attention to what the so-called experts were saying. They were all talking. The tape was showing. And in every case where they conflicted, the tape was right and the talk was wrong. Always. Every single time. The market rewards those who listen to what it is actually doing, not to what people say it should do. Now we arrive at the part most people want to skip, because it demands honesty rather than technique. Alignment is not something you do once and keep forever. It is something you must re-establish constantly. Every winning streak tempts you to overstep. Every losing streak tempts you to abandon your process. The market knows this, because the market is human nature amplified. To stay aligned, you must continuously reduce yourself. Reduce your opinions. Reduce your predictions. Reduce your need to be involved. The greatest trades of my life were not the ones where I felt smartest, but the ones where I felt most detached. I simply recognized the condition, took the position and waited. No drama, no urgency, just obedience to what was unfolding. That is the paradox of trading. The more you try to extract money from the market, the less it gives you. The more you focus on alignment, on behaving correctly regardless of outcome, the more consistently profits appear, not in bursts of luck, but in waves of inevitability. This is what it means to let profits take care of themselves. You stop chasing them. You create the conditions where they have no choice but to appear. And when they do, you do not celebrate. You respect them because you know they came from discipline, not brilliance. Let me tell you something personal, something that still stings when I think about it. After I made that legendary fortune in 1929, after everyone was calling me the greatest trader who ever lived, I lost it all. All of it. Not because the market changed, not because my methods stopped working. I lost it because I stopped being aligned. Success made me arrogant. I started thinking I was smarter than the market. I started making trades based on ego, on the need to prove I could do anything, on the addiction to action rather than the discipline of patience. I made trades in markets I did not understand. I held positions against clear signals to exit because I could not admit I was wrong. I started listening to my own press clippings instead of listening to the tape. And the market, patient teacher that it is, took everything back. It had to, because I had violated the fundamental law. The market is always right, and your job is to align with it, not to conquer it. That humbling taught me more than all my successes combined. It taught me that alignment is not a destination, it is a practice, a daily practice. You wake up each morning, and you ask yourself, am I aligned with the market today, or am I aligned with my ego? Am I reading the tape, or am I reading my hopes? These questions never stop being relevant. No matter how experienced you become, no matter how much money you make, the market will always test whether you have learned this lesson. It will give you wins that make you feel invincible, just to see if you will become reckless. It will give you losses that make you feel incompetent just to see if you will abandon your discipline. The traders who survive, who build lasting success, are the ones who pass these tests by staying aligned. They do not get high on wins or low on losses. They simply observe, adjust, and continue following the market's lead. When you are truly aligned, trading becomes almost mechanical. You have criteria for entry. You have criteria for exit. You have rules for position sizing. You have stops in place. None of this is based on emotion or opinion. It is all based on what the market is showing you. And because of this structure, you can trade without the emotional torture that destroys most people. You are not hoping. You are not guessing. You are not fighting. You are simply responding to clear signals with predetermined actions. This is where people get confused about discipline. They think discipline means being rigid, forcing yourself to follow rules you do not believe in. That is not discipline. That is self-punishment. Real discipline is aligning your rules with reality so completely that following them feels natural. When you understand that the market punishes ego and rewards patience, being patient is not hard. It is obvious. When you understand that the market moves in trends and rewards those who ride them, sitting tight is not torture. It is intelligent. I want you to think about what I am saying here in terms of your own trading. How much of your activity is aligned with what the market is actually offering? How much is just you manufacturing action because you are bored or anxious or trying to make back losses? Be brutally honest. Most traders, if they are honest, would admit that less than half their trades are truly aligned with clear market conditions. The rest is noise. Expensive noise. What would happen if you committed starting today to only taking trades where alignment is obvious, where the setup is clear, where the risk is defined, where the path of least resistance is undeniable? You would trade less, much less, but you would make more money. Your winning percentage would improve. Your average win would grow. Your emotional state would stabilize. This is what alignment does. It does not make trading exciting. It makes trading effective. The market does not reward excitement. It rewards endurance. It rewards the ability to do nothing for long periods and then act decisively when conditions warrant it. Think about a predator in nature. A lion does not chase every antelope it sees. It conserves energy, watches the herd, waits for the weak or isolated target, and then commits everything to that specific opportunity. That is alignment. That is efficiency. That is how you survive and thrive in an environment where most participants fail. If you remember nothing else from this video, remember this. The market is not a puzzle to be solved, but a force to be aligned with. Your job is not to conquer it, but to cooperate with it. When you finally understand that, trading stops being a battle and becomes a practice. A quiet, demanding, deeply personal practice. And in that silence, fortunes are made. Not quickly, not easily, but correctly. If this message resonates with you, if something I have said today has shifted your thinking even slightly, I want you to do something for me. Go down to the comments and tell me, what part of your trading do you feel most out of alignment with right now? Is it patience? Is it risk management? Is it the discipline to sit tight in winning positions? Reading those reflections matters, because awareness is the first step toward correction. We are building something here together, a community of traders who are committed to doing this the right way, the aligned way. And make sure you explore the other videos on this channel. We have not built them as isolated lessons. They are a progression. Each one reinforces the same core truth from a different angle. Each one gives you another tool for staying aligned. Watch them. Study them. Let them become part of how you think about markets. Now, I am going to ask you one more time to check out that ebook in the video description, Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk. Do not read it to feel inspired for a day. Read it to be changed for a lifetime. Read it slowly. Take notes. Question your own habits against what you learn. That book is everything I have learned, everything I have paid for with millions in losses and gains, distilled into practical wisdom you can apply immediately. Align yourself with the market, and stop demanding that it serve you. Stop trying to force it to move when it wants to rest. Stop trying to predict when you should be observing. Stop trying to be clever when you should be patient. When you finally learn to listen, to wait, and to act only when conditions demand it, you will discover the great secret every successful trader eventually learns. When you are truly aligned, profits no longer need to be chased. They find you. They find you because you are positioned correctly. They find you because you have removed the obstacles, your ego, your impatience, your need to be right, that block most traders from success. They find you because you have learned to work with the market instead of against it. And once you experience this, once you feel what it is like to be in true alignment, you will never want to trade any other way. The market is waiting. It will still be here tomorrow and the day after. It will keep creating opportunities, testing participants, rewarding discipline, and punishing recklessness. The question is, will you be aligned when those opportunities appear? Will you have the patience to wait for them? Will you have the discipline to act on them correctly? Will you have the wisdom to let them run their course? I have given you everything I know about this. The rest is up to you. Do not waste this. Do not file it away as interesting information. Use it, test it, prove it to yourself through your own experience. And when you do, when you finally crack the code of alignment, come back here and share your story. Help the next trader who is struggling with the same questions you once had. This is how we build something lasting. Not through secrets and tricks, but through shared wisdom, through the hard truths that actually work, through the discipline to align ourselves with reality instead of fighting it. Now go study the tape. Wait for your moment. And when it comes, act with conviction. The market is the greatest game ever invented. And you have just learned its most important rule.